Let's get started for a little final hour, just after 3 o'clock on Friday the 7th. Markets came alive this afternoon. Things are looking a little bit pessimistic. We hit that 50-day moving average. It didn't really show much signs of life, but nice little reversal pattern on the day, coming back up to fill the gap, which is pretty impressive. So I'm not saying this is the bottom that's in, but we've rallied about 80 points off the low. And was the market satisfied with a support level, which we have been talking about now for a while? So here is your QQQ with the 50-day moving average offering some nice support today. That could be encouraging for the bulls as long as we kind of maintain this long wick to the south. Looking to see if this actually turns bullish on the day. That'd be also pretty encouraging. Take a look at the SPX price action here. Testing the 50-day, rallying up into a green candle on SPX. XSP, very similar. Wick, green body. SPY, wick, green body. The Dow didn't quite hit the 50, but we tested the 50 on the October 10th sell-off. Long wick in green body. We will see. I think that if we zoom out, I'm not completely convinced that this is over and done with. But we had a nice profit on daily profit play, took a nice winner on double ups today, had a good week overall, and nice to see the markets coming back a little bit. Now, I'll take one more thing. I can delete this because our daily profit play was nice and profitable. We closed it out for like a 60-cent winner today. Let's look at the current trend line. So we have resistance here, resistance here. I'm just connecting the dots, okay? So, is it possible that the markets carve out a sharp low at that 50-day moving average? Yes. That's very true, right? So if we put in a low, you're having to kind of have the courage to trade it now, right? A bit more confirmation, giving the bulls a chance to, regain would be we're coming all the way back to like 6750, 6800. Are we going to break and go back up to these highs? How much higher can we go? How much, thrust and bullishness is left back in this market? I don't know. We'll find out. But I've been, making some warnings that, at these highs, a bit of a broadening pattern can be a tricky pattern to trade, but recognizing like the market may go a little up and down, but not necessarily do a lot of technical damage. It's kind of easy to think when the market rolls over a couple of days, it's like, how bad will this get? We did hit some supports today. It's showing signs of life. I did mention in Telegram, looking at the heat map here, we've just gone. I literally just posted this like within the last 15 minutes. We went from about a 49% advancing to now 55%. So there's a late rally happening in the markets. The heat map is turning up. You can see it's a pretty big rotation away from Mag 7. Tesla's down, AVGO down, Nvidia down, Microsoft down, Oracle down, Apple down, Google down, Meta down. And there's a lot of green sprinkled in there. They're just smaller charts or smaller pieces of the heat map. So let's see here. Financial asset management looking pretty green today. I saw insurance was looking pretty green. Energy looking pretty green. Equal weight. I mentioned the RSP compared to the SPY. This should be going up. And this has been improving for the last couple of days. So, it's really interesting how this played out. The SPY, when we went to fresh all-time highs just in the last week, the end of November or the end of October here, the SPY was making fresh highs, the RSP was making fresh lows, and here is a little rotation. So now we are seeing the RSP outperforming the SPY, and that is a good sign. I think that is a good sign. That kind of needs to happen. Let's see if the market breadth indicator is also improving. Not quite. So market breadth is still around 38.56, which means about 62% of stocks are below the 50-day. But are we seeing something improving above the 200-day? About the same. NASDAQ, market breadth, 52 on the 200-day. Okay, so I thought we'd have a little bit more of a pop in breadth than what we have right now, unless this is somehow not live. It should be live. I mean, this is a daily candle, so this should be live. But anyway, we'll see. I'm just saying from the index side, it was kind of nice to see the markets come alive this afternoon. The SPY did hit the 50-day moving average. The QQQ did hit the 50-day moving average. The XSP, SPX did hit the 50-day moving average. So I wasn't taking crazy pills when October 10th was close to that 50-day moving average, but didn't actually hit it. So It did hit in futures, and I saw a lot of analysts were like, "Oh, it hit in futures, so that's good enough." It's like that's not good enough. I expected it to get hit. So going up to this like inefficient rally to all time highs, I was skeptical. So we did take some tops up there. Traders were with me. We were trying to short some things just above the 7,000 handle, and we got a couple nice payouts on that. And also this week we have survived all this craziness. The markets had like a nice steady down week with a lot of volatility. Okay. I mean, take a look at some of these gaps we've seen. I'm trying to go this week. I mean, the market sold off on Monday. We gapped higher Monday, sold off 0.8% over 50 points. Market makers still did their job and kept things within the plus or minus that you can see in pretty much every major option chain. Same thing on Tuesday. We have a massive gap lower. The market starts 1.2% lower, goes virtually nowhere for the day, but comes right back down to the lows. So we had a 1+% gap, a rally up of about 50 points, and then a fall back down to the same 50 points, retested the lows. Wednesday opened up, ran all day, closed within the market maker day. So we had a Monday market maker day. We had a Tuesday market maker day. We had a Wednesday market maker day. Yesterday, the markets were actually pretty contained inside of the market maker move from the open to this afternoon indecision. And then the last little bit, it sold off at the end and exceeded the market maker move. But we had enough to take profit on a lot of our trades. So it was good as far as managing trades. But if you didn't touch anything, if you didn't manage anything intraday, that would have been a painful day or a losing day. Today, market makers are still doing their job. We opened up around 66.92. We're within about 20 points of the open this morning. So it's certainly a market maker day, which I did say going into yesterday's close that we probably have a market maker day. And that seems to be the case. So, I'm pretty happy daily profit play, winning 5 for 5. We had some nice winners this week on double ups. I see a question there. How do you see the double up trade? I mean, see what? Like the trade that I opened and closed earlier today? I mean, I can monitor it. It's not good if you're still in it. I mean, the pin price that I had was 66.85. You're out of the net right now, and you've got the final 48 minutes. So price has to come back into like 6,700 or less for that butterfly to be paying you. So if I go SPX, I closed out the trade earlier. Let's go here. So right now the trade is actually upside down by about $20. If you're still in the trade, you're upside down about $15 to $20. You had an opportunity to take about $280 out of the trade today. Max risk was 115. You had over $280 of profit during the day, and that profit would have been received probably best as price was rallying here. I had that pin price around I did one to the downside at 6,600, which only was a 60-cent risk. I did one up here to the 66.85, which was a $1.15 risk. And so that $1.15 risk is now paying, it was paying profit. It had up to about $280 of profit. Now it's past the profit trap zone. So if you didn't manage that profit, this one is only risking $60. If you're down $60 and that's the most you risk, then worry about managing the winner. You manage $200 of profit. You manage $250 of profit. You manage $280 of profit. Take the profit. My alert today in double ups was if I see $50 to $100 of profit, I'm going to take profit. And I did. So I grabbed $100. It was like a net 60 or 65 in the day. I had a net 60 on daily profit play. It's a good day. Okay. Let's see here. Still made money on the other calls. Good. All right. Nice, Craig. Yeah, daily profit play was good. In fact, the levels, I mean, I think our high was 35 and 40 today, and our low was 6,600. So if you're still hanging in there for a daily profit play, it's looking good for a full winner. But it was already down to like 80 cents earlier in the day. So take the profit. I closed it out at 40 cents. So we had $1 credit, took profit at 40. I'm pretty happy with that trade. We had some good winners this week. Okay. All right. So we'll see how the day unfolds here. Let me do some more top-down stuff. I had a good request as I'm starting these final hour sessions to focus in the first, let's say, 10, 15 minutes of the session, just focusing on top-down. So my big note for today was we hit the pullback level that I've been watching. It doesn't mean I'm super bullish, okay? But it is showing signs of life that the 50-day is offering some support. providing some stability in the market. That's not a bad thing. Okay. So now the question is this enough support to push price back into, I'm not going to say all-time highs, but obviously that'd be pretty great if that was the case. Is market's like, oh, we're down 3%. Let's go ahead and rally back up. What was the peak to trough, by the way? We had a pullback of about 3 point. I mean, that's our biggest correction of the year outside of, Liberation Day drama when the market obviously dropped from February to April. As far as the bottom was in on April 7th, April 9th, and the melt up that ensued, we finally had a decent pullback. So from the recent all-time highs to the low today, a 4.18% correction. Okay. All right, market. So let's see if that is enough to kind of get the market back in line with, hey, things aren't that bad. Earnings are fine. Earnings are stable. Earnings are steady. I put in a credit on that one. I got filled on Meta, Thomas. I got filled at $2.40. So I put in a $3.60 take profit. So if it bounces, and plus that trades out to December. So I have some time to see, if the Mag 7 doesn't just slouch in for the rest of the year, if we stabilize there and actually have a gap fill, or we get some, animal series to lift up before the end of the year, it's hopefully not that far away. I mean, Meta is down. We're down to 618, right? So, I mean, we were down all the way to like 600. We have a 610 by 615. Let's actually take a look at the trade right now. I don't think it got filled for profit. That'd be pretty soon. Meta is here. So I'm up $23. I was going after, I mean, I wouldn't mind taking like a quick $60 if we're back up to $3 credit. That's a quick winner. I need price to stay above 615. So if it does, that's pretty good. If we have more of a, bottom here, and what's interesting is take a look at this from the technicals. From this low to this high, we actually bounced today right around the 618 retracement. So if there's any, validity to that as a technical level, we hit the 618, we rally back up, maybe try to stabilize into this news break retreat. And obviously there's a lot of room to the upside for gap fill. So I'll just hang in there a little bit. If the trade was like expiring today, I'd take the profit. Obviously, if it was expiring next week, I'd probably take the profit just to be safe. But it's out to December. I think we can let the market, get this correction over with, and maybe this is it. Maybe this little 4% correction is what the market needed to, shrug it off, reload some trades, take away some of the deleveraging. Maybe people loaded up on the 5x levered ETFs, and all of a sudden they got their butt kicked with the market down. I mean, can you imagine for a moment being in a 5x levered ETF and watching Nvidia, which is already down 15%? Can you imagine that being a 60% pullback in your position? So, I mean, that's what's silly. It's like I would never touch those things. A 5x levered ETF. I mean, you're going to risk everything on it. It's all about timing. It's just I don't know. It's a very dangerous play. I'm sure there's going to be somebody that will tell me like, "Oh, Chris, I made all this money on it." Okay, good for you. I'm not faulting anybody for making money. I'm just saying like the risk is obvious. The underlying move. It's like if something moves 5% and you're down 20 or 25%, most people aren't prepared for that type of drawdown. If something moves 20%, you're literally zero. Like the instrument is toast. So nobody wants that. All right, let's keep going top down. So we finally hit the 50 period moving average. We see a little sign of life. That's good. Let's see if we can hang in there. Let's go to the the VIX. Okay, the VIX was up today. That's a nice little poke. VIX got up to around 23 today, but is retreating pretty nicely. So VIX is up as high as 2273, and now the VIX is falling pretty hard for the afternoon, which is coincided with that rally. So here is your rally for the afternoon. This started right around 12 noon Eastern time, and the VIX top was 12 noon Eastern time. That's not by accident. There's your inverse correlation between the S&P and the VIX. VIX is up, S&P's down, VIX is down, S&P's up. Okay. All right, what else? Move index. Let's go back to the VIX here. Let's go to the move index over on this chart. Move index is up slightly. Dollar index at 99.52. The dollar turned nicely right around these resistance levels. Okay. This is good. I think if the dollar was going to continue to get stronger and up, I feel like there'd be more there'd be more of a risk off tone if the dollar is going to continue to run. But we did have 1, 2, 3, 4, 5 candles in a row to the upside. I think on the weekly, I'm curious what we look at on the weekly for the dollar index. Yeah, it's hit and miss. I thought it was like going to be multiple green candles. It's not. It's just been a slow retracement since that double bottom in the September rate cut. So, just respect a couple of things here, right? We pull back to, let's say, 98.50. 98.50 could be some support. There might be a little indecision. I think one of the more surprising trades of the year, by the way, I'm still watching that double up trade. If you're in it and we're back below 6,700, you're still inside the profit trap that you want. That was a 1385 iron butterfly. If we're below 60, it'd be 66.98. Basically, I mean, I guess 66.99. As long as we're below that, we've got some profit. Um, maybe the day is just like a big nothing burger from the opening candle to the closing. When it's like maybe we're opening or closing up around like 6,700, maybe 66.90 or so. That profit trap would still be offering some good profit late in the day if you're still in it. Again, the job is to manage profit. All right, dollar index oil still pretty stable. Big picture, I am looking at oil to do the following. I'm not short oil, okay, but I am adding to longs, trying to stay. If look to see if either one, this is going to offer up some support, or I will look at this swing from COVID to 2022's top. Will this actually have a symmetry pattern? So X, A, B, C, D. And then I want to get dollar cost average into oil in this area. And if I can buy this area and take it back up to the harmonic center, which would be probably like a 40 to 50% gain. And if this is going to be a 1, 2, or a 1, 2, 3 wave move, are we actually resuming the uptrend in oil? So target one, if I get oil into like the low 40s or let's say 30s, I'm going to buy oil. If I take oil into $60, which is about this low, $60 to $65, that's target one. Okay. So I'm looking to see, will oil, number one, come down to this low? If it will, I want to buy it. If I dollar cost average in with, low 40s or high 30s break even prices, we go back to, let's say 65. I'll just say that I've got a break even at 40 and I close this thing at 65. Okay. So 65 with a cost basis of 40, $25. I mean, I'm up 62% on oil. That's not a bad trade. Not a bad trade. So anyway, looking and this is not a near-term trade. If I'm looking at oil this way, this is more of like positioning, dollar cost averaging for the next probably 1 or 2 years. So it's a bigger picture move. Natural gas, I was debating on getting in some natural gas. I did some analysis this week on what stocks and energy companies I'd like to look at. We can talk about those more, next week. But I have some trades in UNG. I'm doing some diagonal spreads. I'm doing some long calls. I like UNG because it is pretty liquid. By far the highest liquidity for natural gas. I'm looking for stocks in particular that would benefit from natural gas. If you like long natural gas, which I do. EQT, AR, LNG, KMI, CTRA. Those aren't too bad. You can also play commodity-based baskets as well. There's a FTGC and DBC and DBA, I think, are commodity-based baskets. So I don't know. There's stuff like that. Others. What else? AES, NRG. Next era is NEE. There's a few. So anyway, I'm looking to see, natural gas is probably the fastest energy play for this AI data center build out stuff, the AI race. I think natural gas is going to be the most demanded energy source right now. Oil probably second because it's most readily available. I don't know if we do anything with Russia, like sanction wise, that threatens oil prices for higher, for lower. I'm not really sure. I think the reason that inflation has been relatively contained in 2025 is because oil prices have been suppressed. So if we continue to suppress oil prices, I don't think that's a bad thing. But I think ultimately, if oil is down to $40 or less, it's hard to have a world that's happy with oil prices at $40. So I'm buying it. Okay, nice, Larry. Yep. Good stuff, man. Okay. What else? Gold and silver. Gold. I'd like to see a little bit more pullback. Um, I'm actually thinking on GLD. Well, let me see what a 10% discount gets me. If I get, I mean, basically, if I buy shares, add a covered call, I get about. I'm trying to think. It's a 15. Let me look at it here. GLD. If I go out to, I think it's January 2027. I looked at this yesterday. If I go out to January 2027, selling at the money. So we're at 367. If I sell 365, I get 38.25. So break even 367 minus 38.25. So it brings me down to 328. So 38.25 divided by the cash of 367. It's about a 10.4% gain on gold. I don't mind having some chunks of shares here. If I do a buy shares, add a covered call, brings my cost basis down about 10 plus percent. And if we come down 10 plus percent, I'll do the same thing. And I'll establish like two chunks of shares. I don't think this trade would get threatened necessarily. I do have some dollar cost average levels in that I'm interested in, but I think just generating some premium, getting 10%, I mean, that's not a bad trade. If I allocate $3,000 or so, or I guess it'd be, I get about a $3,000 to $4,000 return. It's not bad. And then I still have chunks of shares running for bigger picture moves. So what I'm doing on gold is we're at the 21 period moving average. If we pull back to the 50 or deeper, this might be a pretty ugly pullback. I mean, gold is it got a little euphoric. I think that this probably rattled the late chasers. I think this rattled the loose hands and not the perma bulls on gold. So maybe there was like this late chase to push it up to these crazy highs. But as soon as the market rattled them out by 10%, I don't think a lot of people are left right now. So it's probably still institutional based. I think it's more, central bank based. I still think that the bigger picture is everybody wants gold. Like big pockets, countries, banks, people want gold. Be prepared for some more volatility because we've had a 3-year bull market. So if the bull market deflates a little bit, I could understand this thing pulling back to a long anticipated, long awaited 200-day moving average, which is still quite a bit lower. So if we continue to drop a little bit on gold, that's another 14 plus percent. So that's also why I'm a little bit hesitant just keeping in. I do have GLD, CEF, PHYS. I do have some dollar cost average positions in just waiting at these trend lines. But I think I'll wait on like actually adding a chunk of shares with a covered call. So if we pull back to like the 144, I'll probably start the journey there. Okay. Silver, similar, 16 plus percent pullback. We go high, low consolidation. Do we head down a little bit lower? Maybe. I hope that we do. I want to scoop up some more silver. I like both of them, bigger picture. The 100K support level, I said that might be a key level on Bitcoin this week. I'll be interested to see how it trades over the weekend. There's still room for Bitcoin to struggle into like the low 90s or high 80s, but clearly 100K is holding up right now with some indecision. Where does Bitcoin get to the upside? We'd have to close above 111. Close above 111 things. I think that the bulls can take a breather, see some upside push. We obviously take out 116. We're probably heading back to our highs, and that would be just a correction. So I mean, I don't really need this trend line on my chart. I just had it here because we had a high. I'm just going to see how price kind of behaves around this trend line. It wasn't quite as clean as this one was. This was like one of the easiest buy trades on Bitcoin to just like follow a trend line break and get rewarded really nicely for that one. This one's a little bit noisier and a little bit uglier. So potential support around like the low 90s. If we break above 111 or 115, I think we're off the new highs. But definitely some volatility in Bitcoin. Let's see what else. How's Japan doing? Let's go with currency strength for today. CAD up today, Japanese yen down. Anything yesterday? Pound, yen, Aussie, New Zealand weaker. We did have risk off trading pretty much all week. CAD up today was the only news we really had this morning. CAD had employment news that looked pretty solid, and then we had, I think 10 o'clock was U of M sentiment, which was like again like some of the worst levels we've seen since like a bear market or recession or whatever. Sentiment's just not great across the board. Okay, Japanese yen, not really changing too much. Let me go dollar yen for a moment. I mean, I think that I've got to get into some 6J in a little bit. Not yet. Japanese yen futures. This might be worth taking a stab at it. If we are down into these lows, I'm probably looking out like 6 to 9 months to either one, get long FXY again, which I do have some shares of that, which is like owning the Japanese yen as a stock, or trading Japanese yen futures with a bit more leverage and doing something to find risk with asymmetry. I think the last trade that I took on this one, I was risking about $300 and I closed out for $450. It did have a chance to run to about $700 of profit. So I had about a 300% gainer until price pulled back. I'm happy that I'm out of the trade because this trade would be pretty much trash right now. But I got in off of this pullback. So once we had kind of a sniff of these equal lows, I was long on futures, had a nice win. I'm looking to do the same thing. We come back to that same level, I'll do a defined risk trade. Okay, Nikkei, let me set a chart alarm here, see if we can breach some recent all-time highs again. I am long on EWJ. Let's see if we can breach some of these highs. I still have some shares of EWJ. DAX, still really sideways. FTSE, closed out my puts on FEZ, which is a Euro stock. FTSE is just off all-time highs. We probably have a stall or some pullbacks coming. This thing off the lows. FTSE is up 30+% off the lows. It's not bad. A little consolidation, I think, would help. Buying the dips. Technically, it looks pretty good. Just to keep the FTSE going up, looks pretty good. Argentina. I think this was on the U.S. Argentina bailout announcement. That was a huge rip. I wasn't in the ETF. I wish I was because technically that was a great spot. $69 right at these equal lows back from 2025. Tested them again. Choppy little pattern, but what a great rip that was. 69 up to 95 in a day. So that's a huge move. I didn't get that trade, but that would have been sweet. China, stable, still good. Let's see if we can break some recent highs here. Brazil, awesome. Brazil's up some fresh highs. I'm long EWZ. ILF, I'm long ILF. Those are looking pretty good. So not like gangbusters. I'm only in for like a chunk of shares for everybody, but the ETF is cheap. Give me a second here. Let's go EWZ. There. So it's up about $5,100. But off to some fresh highs, which is good. I could have swore I bought more. Did I not buy more shares than that? I guess I'm like, yeah, I'll buy $1,000. That's pretty small. But it could double. I mean, getting this thing in the low 20s. I mean, we could get back to $40+. That was kind of the intention, was trying to get long Brazil and take this up to a double. I think it's possible. ILF, kind of the same thing. Can this get back to $36 to $38? I bought this thing around low 20s. Not quite a double for me, but it could be pretty good. Mags, again, pulled back to the 50-day moving average, similar to the indexes. Let's see if this stabilizes or if there's more RSP versus SPY. Keep an eye on that. Apple, still just off all-time highs. Amazon, decent correction off of the crazy good earnings report. I did close out a ratio spread today for Amazon to take some profit. It was like a 155 by 150 for $1, like $1.50 profit, and I closed out for like 20 cents. So grabbed $1.30 out of that, which I was pretty happy with. Broadcom, waiting. Google, I'm not interested in doing anything with Google at 278. If we have a pullback, otherwise, maybe some dollar cost averaging. Let me see if there is a price point here. I'm sure Snowflake looks pretty good, but I was going to say it's probably already fairly priced. So price to earnings, 27 times earnings. You got Mag 7 stocks trading around like 29, 30 times earnings. The overall S&P is at like 23 times earnings. It's a little frothy. Fair value 286. A correction, and not that I'm saying that I want one right now, but a correction in the markets that would bring Google down in price would be welcomed. I think this is a great stock to have in the portfolio. It's just I don't love buying it at all-time highs, but You can say that now and watch this thing still go to $1,000 at some point in the next 5 or 10 years. Meta, let's keep an eye on this one and see if we have a retracement back into some of this earnings trouble. Microsoft, maybe a range. This one might be a decent spot to look for some support in here. If you want to go something defined risk like a bull call spread, find some support, see if it bounces. If you like some Microsoft. Otherwise, I'm sure if this rotation is for real, then give the Mag 7 a freaking break and go find some other stuff to trade. Position in oil, position in natural gas, position commodities, position some type of rotation where there's things that benefit more than Mag 7. The concentration, I think, was scaring the market a little bit as we got a little softer this week. Netflix didn't quite get the fill yet, but did we get filled? I don't think we did. Netflix was a pending order. I did get filled. Hey, now we got a bonus trade on Netflix. I think this was my newsbreakers. I didn't think we got filled. Well, skin me alive and call me luggage. Netflix. We did December 19th, 1075 by 1080 for 250. That was filled. Perfect. So if you're in my newsbreakers, that trade is added. Okay, let me highlight that one. So Netflix is trade number 91. Okay, I'll make a note. I'm going to set newsbreakers trade. That is trade 91. Netflix. The 12/19 expiration. Okay, so I'm setting a 50% take profit. All right, so let me add this one in for news and put in the 375, make $1.25 in that one. See if that'll automatically get us filled in the next. So Meta and Netflix may be getting us some winners. Good. NVIDIA, all earnings, eyes on earnings in a couple weeks, November 19th. That'll be a big one. If the market is looking stable until then, that's probably a good thing. Last time we had earnings, nothing happened. This was the last earnings print we had for NVIDIA. Nothing really happened. Last time we had earnings before that, you can see here, nothing really happened right at earnings. And then it sold off recently, right after, probably within a week or two after. Earnings here, almost a big nothing burger. So it's not really a stock that has like explosive earnings. Meaning it's like I just think there's so much leverage built into it as like literally number one company in the world that I don't like the earnings play on it. I just want to see it is a major, like it's a major catalyst for the entire market. If Netflix or if Nvidia moves like 5%, it has enough to influence the market movement as an entire S&P market cap weighted move. So it means a lot. It's just can it continue to see like great, ridiculous numbers? And if it can, then hopefully that's another like swell for the markets and lifting animal spirits. And this AI narrative remains strong and intact and liquidity flows towards all this stuff. Okay. Tesla was down to about 421 today, is up to 431. I've got a couple trades running on Tesla. I got a little bit creative on a trade this week. I did a trade for Project Options Edge. So I've got some ratio spreads in. I did a 1-1-1-1. I did one here. So this is a 450 by 440. That's a 10 wide profit trap. And I sold two naked puts at the 200-190. I'm out to May. It's out a little bit longer than I'd want it to be, but it's up. It's a $300 trade. Plus it's a $10 profit trap in case Tesla's going to fall. I get $1,000 off, which will help me lower my cost of my shares. So I've got some shares here that's going to lower my shares by about $5. And then I also get the income on top of that. So I'll manage the trade individually. I also have, a collar trade where I had a covered call added into my current price. And then I bought a couple of long puts to be, covering and protecting. So if we have a nasty move to the downside, These two puts right here, for example, it's like they're up $350 right now. But if I need that protection, then obviously I've got it. So it shouldn't be a terrible. I don't want Tesla to be super volatile, even if it is. Um, I've got some protection where I can hopefully alongside with price. But it looks pretty good. We can out and see are we going to stall at these highs, or are we going to break the highs? If we break the highs, I'd like to see us go obviously higher. If we don't break the highs, we have strong dynamic support with the moving averages, and you look left and you've got major levels around like 280 or so support, and then all the way down to like 225. So I'm prepared for this to potentially plummet. I don't know why it would necessarily, but if it does, I've got protection. If it goes to the upside, I've got plenty of income opportunities and some runaway shares that could keep grinding higher. Berkshire, pretty good run the last couple of days, like in great run action. That is not bad at all. Berkshire's up 5% this week. Bonds, any safe haven trading on bonds? Not really. Bonds are down 3%. The 10-year yield has not moved an inch since the Fed cut rates in September. We are literally at the same price. Now, to the positive side, we're not doing the opposite of what we should do, right? Where we had the negative reaction with yields going up, even though the Fed was cutting rates. But unfortunately, the yields aren't moving either. So this is one concern that I have. The Fed's been cutting, and if cut rates in December, that would be 175 basis points. Yet from where we started to cut, yields are actually higher. And that's a very counterintuitive, counter trend move, because for 40 plus years, that's not been the case. Usually rates will go down along with what the Fed's official cash rate is, but bond market is not allowing that right now. Not at this time. Okay. All right. Cryo, what's happening, man? What else? Top down, we're good on futures. Get some currencies going. China stock, I've got Alibaba. Let me set a couple chart alarms. Alibaba back up here. Baidu, I still have some shares. I'm trying to get Baidu back to like 144, highs at 150. I'm letting this thing go around 155. So I'm going to see if this is a chance to kind of buy and get one more surge up to these recent highs. I will close out some profit here. If we get to this chart alarm, I think I'm just going to take the profit. Maybe this is something by the end of the year. FXI, stable. KWeb, dynamic support looks pretty strong. Maybe a dip to the 200 or below, dip below, dip above. Something like this would be a pretty good trade. We come down to, test this support level, close back above, and then get long. So you'd have a low risk, high reward setup on KWeb. If you like China. I'm in Baidu and Baba and JD right now. JD is at $32, $31.87. Pretty strong support. I did a roll. I've got my cost basis down to, let me see what it is. Cost basis on JD. Let's go here. Cost basis is $31.65, and I have a 41 covered call, which I could obviously go way lower. I just thought I'd give myself some appreciation to the upside if we had a run, late in the year. But that didn't happen. I'll set a chart alarm here at 41 in case that somehow magically gets hit, but I doubt it. Alert name, JD covered call strike. And if that doesn't fill, then I will probably just do a much closer to the money call, go out, maybe 30 to 45 days and just generate some premium and lower my cost basis and try to get, if I get, I'm in for 1,500 shares. So if I could get, let's say $5 a share, make $7,500, it wouldn't be terrible. I'd like more. I'm trying to get more. That'd be a $9 move. $9 at 1,500 makes a little bit more profit. So that's kind of what I'm shooting for. So 10 grand or more would be great. Is dollar yen still risk on, risk off correlated? Yeah, the Japanese yen is still risk on, risk off correlated. The dollar yen, I think, look, there's a couple trades that I'm watching on the Japanese yen. The Swiss yen, I'm watching very closely. This probably has the best technical setup of all of them because the dollar yen, I listened to an interesting session yesterday. I don't know I think the guy's name is Brent Johnson. He was the one that coined and created the milkshake theory. He's talking about everyone's talking about the debasement trade and the de-dollarization, but he's taking an interesting tactic for a re-dollarization and potentially even a rebasement trade. And I don't think it's going to be a guarantee. I think there's a lot of potential like pros and cons and a lot of moving parts. But if the dollar gets a lot of strength because of it, I think one thing that's very crowded is this DXY trade. Watching the dollar yen, for example, the dollar yen is still range bound from this like 160 area down to this 140 area. So I have no interest in holding dollar yen short because the technicals aren't aligned for a sell trade yet. And also it's a negative swap trade. On the Swiss yen, this is like the only trade that I'm thinking if we have a nice technical sell off and this thing can roll over hard, man, would I love to see the Swiss yen drop from 190 to 165. So, and also the broker's not going to charge me every single day for negative swap. So if I could get a confirmed sell trade, and that might be price has to either come back and fill this gap, take out this low, give us some type of topping pattern, get this thing to roll over a little bit. A 2,500 pip or 3,000 pip trade with positive swap, I will take that trade. So what I'll probably do is start a little dollar cost averaging. Stop loss would be like an ATR above these highs. And I will start adding sell stops along the way because if this is my destination, I think we ultimately get there. So I can stack up maybe, 5 or 10 trades if price is going my way. That would be awesome. I do say this with a caveat though. If you expect this trade to be really profitable, then you're going to see some pretty amazing risk off trading in the markets. And that's probably not going to feel great. So it might be a bit of a diversifier where if the Japanese yen is really strong, and that's risk off trading, you want to have some hedges in your stock portfolio. You want to be looking more to cash and safe havens, rotating into maybe some low beta stocks, because I don't think the Japanese yen getting all this strength would be good for anything as far as risk appetite goes. That'd be terrible risk appetite, in fact. Okay, markets, I know, and they've been that way since even since Powell's press conference in October. Yes, he said it's not a foregone conclusion that we're going to cut rates in December. The markets didn't really budge. It's still like a 66, 67% probability they cut rates. So I think it was just a noisy delivery. I think Powell's big message is that they are finally ending quantitative tightening. They're ending the roll off of the balance sheet, which means they might even get back into expanding the balance sheet, which is probably not a good thing. So we are closer. I've talked about this before. I actually have a session on this on the 17th. I'll share more details about this, but I'm doing a end of year webinar, a 2026 projection webinar with A1 Trading, and we will be talking about where I think that the Fed positioning and this paradigm like A, B, C. Really, it's paradigm A, B, C, D. So C is what we're in right now. C is we're trying to grow. We're going to grow. We're going to outpace inflation. We're going to grow or die. Right? We have to win this arms race. We have to win this AI race. We have to win this energy race. We have to win this. It's a war, right? So that's paradigm C. Paradigm D is we prove to ourselves that we can't outgrow this. We proved to ourselves that the 10-year yields and borrowing and refinancing and restructuring is not getting better. And it just basically taps out everybody. You have consumers that can't afford to buy houses. You have consumers that can't afford to buy stuff anymore. You got job losses happening left and right with a super soft labor market. And you go from we're going to grow to listen, man, Main Street is struggling. And Main Street is literally looking to vote in like socialist policies if you don't like improve this stuff. So you go to paradigm D, which is you're just trying to print, you're trying to salvage, and you're going to blow out the deficits. And I think that's where the fourth turning in the crisis really happens. So, in the next, I'd say 3 to 5 years, I would not be surprised if we have like a 30 to 50% correction in the markets. And I'm not saying that scare anybody. I will be here navigating this crap right alongside you. But I'm saying like that's the type of stuff we have to be prepared for, right? If your average year in the stock market can go on average 8% is your average return, okay? And your average pullback or drawdown is 15%. So what happens if everyone wants 10, 15, 20% upside? That's going to come with double the risk. So after we've had stretches and what looks to be bubbles of, 20%, 20%, 15, 20%, those don't last forever. And eventually the equilibrium of 8%, the natural reversion of the market, is going to cause a lot of pain. So I just want us to be prepared for, it's going to be in probably our near lifetime, maybe 3 to 5 years, we probably have some serious pain and pullbacks of volatility ahead. So, there are ways to prepare. There are ways to, profit from it. And obviously, it's not super easy to profit in a bear market unless you're just totally lean bearish. But there are ways to protect. I think this most important thing is trying to protect yourself so it doesn't hurt as bad. Because if your positioning can be, bull markets. Okay, so 2022, did you survive? 2023, 2024, 2025. So if we have a nasty bear market, I want to make sure like I'm not giving it back. It might not be an easy year to generate, 20% return, but I think I could salvage 5 to 10%. If the market's down 15 or 20, I think I could salvage break even or better, you know, and I just keep building. So anyway, that's what I prepare for. And, easy way to think about it is plan for the best, prepare for the worst. Okay. All right. We got 9 minutes left for the close. I'm gonna jump here in the next few minutes. I've got a private session just after the hour. So let's keep going. What I leave off with currency strength. We're on some yen crosses. Like I was talking about, the Swiss yen is probably one of my favorite technical trades if it confirms. Okay. So this goes all the way back down here to March of this year. We've rallied up to all-time highs again. And I don't know if this is going to correlate with maybe another dump in gold prices. But if gold turns over, maybe the Swiss finally starts to reconcile some of the crazy strength it's had. I mean, I'd love the Swiss to drop back down to like 165. I'd love for the dollar yen to go from like 160 back down to 140, But I mean, if you traded with me in any way for the last like 10 years, and what I say about currencies is the Japanese yen is not a currency pair that you want to fight. It is a currency pair that, and I hate the entries on it because usually the entries on a Japanese yen, it's a bull flag or bear flag. When this thing is ripping to the upside, you buy and you buy the breakout and it doesn't look back, or you sell the breakout and it doesn't stop. Like price action on the Japanese yen when it's determined to go somewhere is usually up, pause, up, pause, up, pause, up, pause, and it's leaving all these pivots and pockets and inefficiencies and fibs just not even close to getting touched. Okay. And then the same thing on the downside, when it falls, it freaking crashes and it will move like fundamentally and technically driven movements will drive this thing like thousands of pips in one direction. So, it's an amazing currency pair when you're right. And my favorite way to trade it is find a good trade, get the stop losses to break even or better, and try to just hold on for no risk. That's my favorite way to trade the yen. I don't like, it does this all the time. It's like you can spend 9 or 10 months doing absolutely nothing on the yen, and then it's going to go straight up or straight down for 3 to 6 months. And it's so difficult to, kind of get and feel that rhythm to kind of, time this thing. It's very, very challenging. So to survive the Japanese yen, don't fight it. Don't dollar cost average into it. It is a currency pair that behaves a lot like a stock, and it can be very irrational. So it will disobey all technicals for months and months at a time, and then it will come back and do some amazing stuff. But it's like this. I mean, this breakout in 2022 went from 116 to 150. That is a 3,400 pip rally, and it did that pretty much in a straight line. Yes, there was a pause here and a pause here, but those were tiny pullbacks compared to what this thing did from a destination basis. Does the yen get positive swap? The Swiss yen does. That's why I'm more interested in the Swiss yen, because the Swiss is at 0% and the yen is at 0.5. So from a broker standpoint, you'd get honestly, it'd probably be like pennies on the dollar, but it's better than getting charged negative swap. So if this confirms, and it's not just this trade, like if I see that this is rolling over, I better see the other Japanese yen pair showing strength as well. Because if it's just the Swiss getting weaker, well, I can trade the Swiss weakness on all the other currency pairs. So I'll say this again. If the Japanese yen is not collectively stronger, then I'm not going to take this trade. But if the Japanese yen at every single chart looks like Japanese yen strength, good. then maybe I'll take the trade. I like the Swiss yen because it's positive swap as a sell trade, but I want to see that the Japanese yen basket is cooperating. If it's only the Swiss yen falling and no other Japanese yen is moving, then it could be a Swiss related trade, and I'll just ride my Swiss pairs like I have. I'm long Aussie Swiss, I'm long CAD Swiss, I'm long New Zealand Swiss, I'm long dollar Swiss, and I'll ride those out a little bit. Okay. All right, let's keep going. Let's go Aussie CAD. I'm still long. Aussie Swiss, some pretty good support around 5,000 or so. I'm holding long for some positive swap, but I'm trying to get a bottoming pattern. I still look at this as, is this a double bottom area that we can, kind of get a bottom, move back into range levels, and then get a measured move. If we get a decent sustained Swiss weakness, I hope this thing can go back to like 55, 5,600. Look at this market, man. We're in the final 4 minutes here. The market's up to fresh highs again today. We officially filled the entire gap. Not bad. What a comeback. You go 50-day moving average. Aussie yen, nothing traded there. Did I get poked out here? Not yet. Okay. So I'm looking for a daily close above 1550. We poked at 1567. If this doesn't daily close above, I'm going to stay in the trade. So I'm in on two positions, 1351 and 1440. So this one's actually filled now. Okay, we'll see how that behaves. Aussie dollar, super choppy. I guess go where the yield is right now. CAD Swiss, hoping we can hold the bottom. Oil to the upside would help this one a lot. It's just a long ways off, so I'm just going to hold for some swap right now. I think Bank of Canada held rates. I think UK held rates as well. CAD yen, no trade. Maybe some structure in here on CAD yen. Maybe. That's a big maybe. Okay, if this is similar to dollar yen, where it's just behaving in a channel, keep an eye on that. Swiss yen, I like it if we're on the right-hand side of the trend line. Aussie, you can see a range bound trading here from 7,600 up to like 8,100. There's a nice little range trade. Euro CAD, looks like we could sell high and still have this thing pull back a little bit. I don't love it, but a pullback in these moving averages wouldn't surprise me. Euro Swiss holding these lows at 9,200 nicely. Euro pounds still trending higher highs and higher lows since this big turning point got above the 200-day moving average. Huge move to the upside, giant pullback, but still making higher lows. Euro yen, very similar to the Swiss yen, just hasn't confirmed yet. Euro New Zealand, overbought conditions with a daily time frame. I don't think this is something I want to ignore. I think this is a good looking trade. Maybe looking at some sell stops to see if this pulls back into some moving averages. If you get filled on a sell stop, putting it to break even or better, and maybe letting this thing run. This might surprise us to the downside, but this is now pretty good divergence at the not all time highs, but at recent highs. So this one wouldn't be a bad one to look at a short term sell trade. You can also take it down to a smaller time frame and confirm it on smaller time frames. Euro dollar, I'll wait. Pound Aussie, no trade. Pound CAD. This one did what I wanted. This was a sell trade from 88.50 all the way down to the moving averages. It surprised me with how aggressive it got there, but that was the plan, was a sell trade around 88.50. Pound Swiss, possibly holding these levels. I'm long. I'm currently long at 107. I'm holding. I didn't take a stop loss here. I just traded really small, so I'm still holding the trade. I want to see if this gets back at all for any type of bottoming pattern. Pound yen, no trade yet. Pound New Zealand, crazy volatile, right? Comes right back into dynamic support. Just a topsy-turvy currency. I don't know. Just either trade it on a smaller time frame or stay out of it. It's really, really volatile. Pound dollar. This trend line, I don't know, behaves, but I don't have really a clean picture on the dollar as of now, so I'm going to hold off on that. New Zealand CAD, I'm looking for a double bottom here around 78.50. If it holds at 78.50, taking longs there, and then I'll shift this over. So that's my double bottom. And see if you're buying this thing low, taking it right back into the midpoint for some profit, or taking it up to the highs. 67.30. Wow. Okay, close today, 67.30. What was our daily profit play today? Daily profit play was 67.45. So we were way up there. That was a great fill. 67.45 call side, 6,600 put side. We got $1 out of that trade. That's a great trade today. Like even with a crazy price action, we had full profits either way. Didn't go down low enough, didn't go up high enough. Like, love it. Okay, New Zealand, Swiss. I'd love to see a bottoming pattern, just not happening yet. New Zealand yen. What's going on in New Zealand, by the way? The Kiwi's been really weak lately. I mean, the Aussie Kiwi, especially, like that currency pair barely likes to trend, and it's up to 115 now. New Zealand yen, pretty choppy. New Zealand dollar, maybe a retest of these lows. I don't mind looking at some strong support here on 5,500. If we hold these levels, I mean, don't just force a trade at the lows, but if we hold, break the trend line, I think this can go back up to 6,000. But strong support 2020, strong support 2022. Keep an eye on it. That's a multi-year range, so I would look to see if that respects it. Dollar CAD, sharp pullback today, but still making higher lows. If you're long dollar CAD, this one's not bad. Oops. If you're long dollar CAD, that's not bad. I want to short the dollar CAD all the way up here towards like 4,500 again. If we get up there, I'll short it. You got to trade the noise in here, but it's buying dips and higher lows and higher highs. Dollar Swiss, a little bit better, slightly higher lows on the right side of the trend line. I'm looking to see if this is carving out some type of bottoming formation. And if it is, if we can clear this level, then maybe we can double that move. I'd love to get back to this level. This is the pocket that I've been trading towards for a while. And, it's positive swap, but yeah, that's the trade that I'm looking after. And then dollar yen, we did keep an eye on that channel, and that's it. Haven't looked at exotics in a while. Turkish lira, Mexican peso, krone. I haven't looked at trades like that in a while. That's it. Shiller ratio. We're in like the 90th percentile of all-time highs right now with the Cape Shiller ratio. Stocks are overvalued. I get it. Doesn't mean we're in a crash scenario. Just means I think rotation is underway. So, I mean, to me, the big tell for today is that RSP found some support, and SPY, at least the rotation is like, all right, if we're going to find some equal weighted support in here, maybe this is range bound. But if we find some support, rally back up on equal weight, it just means that the market can actually stabilize and it's not all Mag 7. But we are going into like the ending window of earnings. We do have some earnings coming next week. Got a screenshot of that here. So next week, let's find some notables. Let's see here. Mostly Tuesday, Wednesday, Thursday is what I'm watching for. Not a ton of awesome names. Oklo, possibly. That's been in the nuclear space for a while. Circle, isn't that like the quantum computing stuff? Did that stock like have a ridiculous run up and then it fell? I think Circle's been out there on some radars. Cisco, that'll be a big one. That'll be kind of like the Oracle. It's like an old school name, legacy tech. Where's their valuation at? Cisco will be interesting to watch on Wednesday. Let's see here. Disney on Thursday. Okay. I mean, I don't see a ton. I know there's a lot of earnings still, but it's just I don't see any crazy notables that I'd like to, dive into. We put plenty of pending orders out that are getting filled, and hopefully we got some good ones. JD.com, and that's one to watch. That's a China play for me. See if that one has positive earnings. Okay. Any other questions? We good? All right. Appreciate everyone being here this week. We had a good week. Double up was good. Waterfall, we took a lot of profit. Daily profit play was great. Had some master classes. Gamma report was awesome. Kane and I and JD had a fun session on Monday. We'll come back and do it again. Daily profit play all next week. We had a waterfall income trade today. That's valid if you want to take the trade. We took one in XSP, a pending order in SPX. Newsbreakers updating double ups today was a winner. This week we had some pretty good winners on double ups. Pinchpoint did a masterclass and added some pending orders. Crash Insurance, we added a trade on XSP. I added a trade in S&P futures. Project Options Edge, just looking to monitor positions. I'll probably do a video update for Project Options Edge next week. If you are interested in some education, like foundational education, prerequisite education type stuff, Practical Options, I did a free workshop on a couple weeks ago. It's on my YouTube channel. So you go to youtube.com/Chris Pulver, search for Practical Options, and I did like a 2.5 hour workshop. So if you're seeing me talk about a lot of options, trading indexes, trading stocks, futures. I trade options on all that stuff. So getting the gist of some strategies. I also put this in my Telegram, kind of some of the must-have strategies where it's just like, I want you to be thinking about the markets like a chess player. If you want to express something in the market, these strategies are very helpful to know. So when they become more like, yeah, I know if I want to be bullish, I can do it with a long call or a bull call spread or a bull put spread, or I can be bearish or bullish with a butterfly spread. So again, there's stupid names. That's one thing I've always hated about options is anyone that talks about them sounds really smart, but it really is just thinking about what does it actually mean to place the trade. If price is above this level or below this level, what's my risk? What's my reward? Once you know that stuff, then options is really straightforward. Then you just think about playing chess, moving this piece, where's my reward to risk, and placing trades. So anyway, I shared this video here. This is the YouTube video if you want to check it out. A lot of you are in the live session with me, but if not, come check it out. I'll share the Telegram. Give me a second. So that is a 2.5-hour workshop that I did on practical options. The course is available for $27 if you want it. That's a quick guide. If you want the full course, you can upgrade. That's 13 strategies for $497. If you are in any of my membership services, if you are a lifetime membership of any of these, okay, then I will give you my full course as a thank you. So that's a $500 bonus course for this. All right. If you're in A1 trading on my Pulver alerts, if you get the Pulver alerts, you'll get the full course as well. Telegram, here's the link. Telegram coming in hot right here. Okay, so there's my Telegram channel. My Monday through Friday, I do run a live trading session every single Monday, Tuesday, Wednesday, Thursday, Friday. Daily Profit Plan. We are live every day at 9 a.m. Eastern Time. So we kick things off, get a good game plan. Today was exactly that. We actually finished inside the 50% ATRs for the day, which I thought kudos to the market makers today, doing what they do best. So the rally, so yes. Okay. 50 period EMA hit and market rallied after 12 p.m. Eastern Time. DPP. We closed for a 40-cent debit for a nice win. And the full trade could have expired for profit by end of day. There we go. So screenshot here. We did all the, we do all this work every single day. I think we did a pretty good job of calling the bottom today. So the low was 66.30. I put here 66.35 potential bottom with the VIX around 20. The VIX did spike up. I was talking about that all morning. It did spike up to about 22, 23. So be careful on the bottom. But even our levels, we had a great fill here at like the 6,600 level and worked out really nicely. Okay, so I'll take that screenshot. And the close today at 67.28. Close yesterday at 67.21. There it is. Okay. I got to bounce. I'm jumping into a private workshop, and have a great weekend, everybody. Come back and join me on Monday. Daily Profit Play. We'll grind another week. Yeah, I just changed the YouTube name. So I'm working on the branding a little bit. Trade to be profitable. I mean, I've said that it's funny. It goes back to some of the private workshops I've done over the years. I've had some pretty good phrases with some of these one-on-one sessions that I've done. I've never like patented them because I'm not, shamelessly selling, but see it, protect it, collect it was a pretty good one to do some one-on-ones. Like somebody was showing me all these trades where I did this analysis and I did this trade and this is what I did. And I managed it for a loser. And I just came up with like, look, man, you're showing me like great trade after great trade. So if you see a good trade, you take a trade, like protect your profit, move the stop to break even. What's worse that can happen to get stopped out of break even? So that was one. Trade to be profitable. Not perfect. I think there's too many people in here that, want to have the ego of, You got to make this money. You got to showcase all the wins. You never show losses. Look, real trading is messy. This is why I trade small. This is why I'm a base hitter, because I think home runs are few and far between. I'd much rather win most of my trades with a mechanical edge or systematic edge than I would, hey, look, I can fake this trade, right? It's like, look, I lose. I've got losses, but I don't take a lot of losses when I do. You know about them. They're in my services. I'm running, 7 freaking services. So I'm not perfect, but I do know how to make money. And that's one of my favorite ones. So trade to be profitable, not perfect. I actually, have the domain to that. So trade to be profitable. If I ever want to do something with it or run like a private service, whatever. But I like the idea that that's what trading really feels like to me. It's not a game of perfect. I'm not trying to win every single trade. I know that if I lose, it's manageable. Wins and losses feel about the same. And at the end of the day, are you making money? So check your ego at the door. Can you make money trading? There's a lot of ways to do it. You can have huge wins to small losses. You can have lots and lots of wins. You can manage risk. You can hedge, but it's probably not going to be just luck. I think if you do this long enough, it's not luck. I think what you look at is you see the forest through the trees. You acknowledge that there's uncertainty all the time. You manage the downside. You manage risk. And when the getting is good, you are more aggressive. It's like when you're playing and you're dealt with I don't even know the poker terms because I barely play it, but it's like if you're dealt with like the I don't even fucking know. Like what's it called in poker if you're playing like Jesus, I can't even think of the game. Never mind. I'm clearly struggling for maybe it's because it's Friday. Um, Texas Hold'em, for crying out loud. Jeez, I was thinking like, what is the game? Texas Hold'em. And if you're given like, aces for your 2 cards, doesn't mean you're going to win, but it means you got a pretty good hand. So there's times to be more aggressive. There's times to risk more, but nothing is guaranteed. Right. All right. Anyway, there's a lot of ways to do it. I'm here to help. Have a good weekend, and we'll see you on Monday. Thanks. Bye.